complicated, more complicated than I've ever done it. Bases, okay. Ah,
What do you see?
The DXY.
Oh, what happened?
That minus 0.25% into
Oh my
the
God, free
FOMC,
fall.
which would
Yeah. Free fall.
Coming into
Welcome back,
you
everyone, to
very
Ashram Hours.
live
We've got our first
from
guest
the
of the year,
FOMC war
and
room.
first of many. Very excited. My old friend, Captain Rational. How you doing?
much a pleasure. What's today? Wednesday? I don't even know the days, but look, it's the FOMC day, and I don't even know the days. It's a good day.
It's a good day. It's an exciting day. May you live in interesting times.
That's right.
Yeah, and to be here on the Fed day is kind of fitting, I think, because you are yourself a Fed. No, I'm just kidding. A macro analyst. You love the macro, so really good to have you here today. It was not planned. It was not planned, and it was yesterday that I was like, "Oh, like the FOMC decision is during our stream tomorrow." That, like, Captain made. Can I call you Noah? I feel like it's in your Twitter name, so it's not a secret.
Oh,
I was like, I feel like Noah may want to be, watching, waiting, and listening, but you're kind of like, I look at 6 month charts.
He didn't spend
oh
8
yeah.
years at Reason Academy to just be called Mr. Rational.
Yeah.
I got
Yeah.
people in my family that call me Captain. It's funny like that.
Oh, that sounds kind of cool, actually. You brought it home with you. Let's pull it up. There's some vicious price action going on right now, and I feel compelled to stare at it while we chat about it. The 25 basis points is confirmed. I think that was a foregone conclusion. There was all these 5%ers out there saying maybe it's 50, but those never hit, and that might have been bad.
Which one you want to pull up? Because this DXY is actually looking quite constructive.
Let's
look at
DXY.
Yeah, let's check out the Dixie. Yeah, there you go.
Okay, what do you see in these tea leaves, Captain Rational?
Lower low, fresh lower low. Not only is it the lower low, so I don't like trend lines. I don't do trends. They drive me nuts. This is the weekly chart. I'd rather zoom out a little bit, but it's interesting to see where the MAs line up on basically the weekly, the monthly, 3 month, and 6 month, in my opinion. So sometimes I go down to the weekly to get every time frame counts to a degree. Anything less than the weekly is just noise to me in many regards. So we got the trend line breach. It's a decent looking trend line. I don't value trend lines that much. I like MAs as well as levels much more. Not much worth to talk about levels on this chart. You're only going back to 2000. Isn't that interesting? Only going back to 2000. That not many people talk about charts and those kinds of time frames.
You're the only person I know that has ever showed me a chart of a 6 month, and I always laugh and I'm like, dude, what can I do with this? You're like, I'll talk to you next year. And I'm just like, I zoom out to the weekly. The weekly is my high time frame. I don't even like the monthly in crypto, but you also look more at the macro trends, things like move.
When something such as DXY is so driven by news and global war, do trend lines, does chart reading apply at all to trying to predict the future with this?
Well, it's affected on the short term, but there's this structural reality to global economics. And more recently, but post 08, who talks about that the best? That's like Raul's territory. He talks about, and then he realized that his narrative was mostly comparable to Mike Howell's, and it was this whole refinancing cycle. And I actually had my ideas in some regards as a derivative of Raul's, and then I heard about Mike, and I don't really align too much with what Mike says. He talks about liquidity in terms of the system's capacity to refinance, but I like liquidity in terms of how many dollar liabilities in a particular market. To me, that makes the most sense. Anyway, so I guess a decent statement is it's not the refinancing cycle for me. It's more of collateral volatility, debt volatility. And that's what drives these markets in this, as I was alluding to when I started this thought, this this global economic phenomena that drives markets. So it's not just day-to-day headlines, war, noise. there's a cyclicality that has especially emerged post 2008 with regard to debt, the volatility of debt, and that's driven by ultimately human drive, human factors, the desire to engage in economic activity, the desire to explore the economic opportunities, and that's where credit. That's entrepreneurship, and that's a component of refinancing. But you then you have the national debts, and then the debt spiral that Groman talks about so well. So they have to grow their way out of debt. So that means you need to grow GDP. So you need tax receipts. So the governments are behind the capital expansion. So everyone is contributing to this orchestration at the highest of international levels that produces a chart like this. Look at that cyclicality. That is the most insane cyclicality I could point to in any chart that I could think of.
Do you think it's essential that currencies go through a cyclical rhythm like this? Is there something just innate in a currency rather than, say, an equity in a company that is just bound to be cyclical? I mean, to make the question more concrete, do other currency charts look like this? Nations that haven't failed.
Oh, bear in mind, this is also an ETF, so this has varying components and varying quantities, predominantly yen and euro. So you get a very different picture. I don't have other currency charts in my watch list. I do. I have the yen, but you don't
Yeah, I was
have.
gonna say, I know you're lying.
Yeah, you don't have that kind of
You did.
cyclicality.
Mhm.
But the DXY has this duration, and it does present like this. So a lot of the story that I tell is literally just based on the way this ETF has played out since the late 60s. And I run with it because it makes sense. And then you could go granular, you could go currency by currency, but then that's like, so my whole thing is, yes, I could look at 1 minute charts, 5 minute charts. I could look at one currency versus another. I don't want to. I want to look at the highest level information that I possibly can to to observe the highest level picture I possibly can to understand as much as I can by looking at the least amount of data possible.
Mhm.
I get that. And your general strategy is also longer term focused, cash flow assets, staking. You love the V token model. Obviously, I know we've talked at length about that. And you were picking up some really good discounts in the bear market on things like Curve, if I recall correctly, or you may be preloaded on that. But so it makes sense from that point of view. And I've always admired that because it's nice to just sit back and kind of let your assets do the work for you. I've never been much of a 1 minute guy. I've definitely looked at them, but yeah, I like to live kind of in like the 1 hour, 4 hour daily swing trade over a period of 4 weeks.
Not picking on the trader.
It's hard to
That's
work.
a lot.
Yeah.
It's a lot of work. It's a tremendous amount of work.
Sigh. It is a lot of work. That's why I moved from day trading. I did a little bit of day trading last year, but I had to move into swing stuff where it's just like pick up depression, sell euphoria, rinse and repeat. And it's super easy concept, incredibly difficult to execute on consistently.
But that's your rules, and what matters is you have you, you have a consistent, predictable plan of action. So the biggest thing novices have yet to learn, if they ever can learn it, is to divorce themselves from sentiment and expectation. The rules, it makes it mechanical, which is why smart contracts change everything. There's no sentiment in a contract's execution. It's an algorithm. It's predefined execution. It's determinism. And when I started identifying these kinds of attributes, I was like, I don't want to invest in companies anymore because they have a problem, and that's called human resources. And smart contracts fix the problem of human resources, the human.
I dare say that's what brought you to us to hang out today. I know we've had a few chats at length about what we're doing over here, and That's a big piece of it. Every time I pitch, I'm just like, guys, like Bitcoin solved monetary policy, and it solved for who owns what. And it did a great job of getting rid of the human touch there, because let's be honest, humans, they go to sleep, they get emotional, they, hoard for themselves. We are all guilty of it. We are all of the same similar DNA, but how can we automate? How can we use algorithms, and how can we further leverage smart contracts to just remove the inconsistencies that come with the human touch?
Aside from that, also craft financial products and services that are increasingly engageable, more sustainable, because obviously, what's the success rate on trading? It's 99% aren't successful. It takes a
like
certain,
upwards of 90. Yeah.
So there needs to be a better way, and that's what obviously my 3 rules that I talk about on my stream and my content. But we can make contracts better that allow people to do better, and there's something honorable in that, and I like that. So there's definitely a lot of room, and this is a concept of like product market fit, and we're at the beginning of this. What's possible.
Yeah,
It's
I
definitely
would agree.
Proven that it works. I saw a fact going around. I haven't checked it myself, but it's something like Hyperliquid, that exchange, is generating something like $100 million in annual revenue per employee, and they only have 11 employees. And I think that proves the point that a successful company can automate their way
Look at
into
Tether.
efficiency.
Yeah,
Tether's
Tether,
at
I think, is
99.
at the top.
How many employees does Tether have?
20.
20. Yeah.
The 99%. They have a 99. There's nothing on the planet anywhere that's even remotely comparable to a 99% profit margin. It's and no one talks about it.
It's because they can't long it. And the Tether doesn't go up. It just sits there, $1.
So it's uninvestable. Well, aside from that, but it's like that's the whole Uniswap concept. It's dominant in liquidity, but it is entirely uninvestable. And what is an investment?
Is that what you were tweeting about this morning? It was a bit vague. Like it was kind of like, if the fee switch isn't on, it's not going to come on. It was now I'm thinking, well, that sounds like a Uniswap reference.
Not directly, and maybe not even indirectly, because it's a concept unto itself, but clearly it's applicable to Uniswap. It's not going to come on. It's just not. They're not going to vote it on. And I don't even want to get granular about it with regard to who owns what in their governance process. It's irrelevant. It's a phenomena of humanity. Change is hard. So this is what smart contracts fix. What is the primary characteristic or attribute that I look for in an investment? Determinism and immutability. If the fee switch is on and it's producing revenue and it's paying me weekly and it's an immutable smart contract, it's going to pay me revenue weekly no matter what any human being wants, because it can't be turned off. It's an immutable smart contract. So that changes the entire equation with regard to what is and is not investable. So what's the equation? The equation becomes, what's the path? What is product market fit? Is it going to grow? Is it going to produce more revenue in the future? That's the only observation to make, whether something's investable or not.
Oh, getting pinged here on the side. Let me just mute that.
Busy day.
It is. It's a lot of busy days these days. Yeah. Well,
I haven't followed the drama around Uniswap. I'm rather naive about what's been going on their bulletin boards. Is it that there's some live debate about whether to say, okay, we're established, let's take a break, let's turn some fees on? Is that what they're talking about right now?
They've had it a couple of times.
There was a vote earlier this year. It sounded like it would as they went into Uni V4. Maybe it was this time last year. The time has been flying by. But it was either late last year or it was early this year where there was a fee switch proposal. And I know because I longed Uniswap kind of around the lows, thinking like, hey, fee switch is coming. That's going to be huge. But I guess in the end, it didn't pass.
Not going to pass. There's no reason to. Why not? Why change? It's working. It's the dominant place for liquidity on the network that matters. Now, obviously, I have a high opinion of the drones, Aerodrome, Velodrome, and I think that works, especially on base and the whole Coinbase narrative, whole separate conversation. But why is Uniswap, why does it own mainnet? Why change anything? And mainnet is what matters because their mainnet has more liquidity than every single other chain combined.
Mhm.
It dwarfs every other network by
Do you want to pull that
billions.
up actually? Yeah, you probably got a good, what is it, DeFi Llama or wherever you're using? That'd be a nice little peek there as we
We
get
neglect
So
into
the
it.
Tron.
convincing argument here is, hey, it's working. Why rock the boat? Why dip into greed?
Yeah,
What's
but
the
it's also,
counter argument to turn on the fee switch? The good faith one.
well, that from their perspective, none. From the crypto space
There's your
perspective,
problem right there.
yeah,
Mhm.
there's nothing. It's like, why give money to people to invest when they're already buying our token and already?
Yeah.
That's
Well,
yeah.
I'd be curious where Hayden and them are at. I mean, obviously they have been extremely successful. They've printed a lot of revenue, and at this point, that revenue is all internalized in the company. They launched a governance token. I guess it works, and things are getting shot down left and right. Um, yeah, I mean, it is the fan favorite thing to do, to take your company revenue and push it out to a token.
Dividends that people,
Yeah.
the general public is more aligned with the concept of buybacks. Dividends is old people's territory. It's how much are you making on your bond portfolio this year?
Yeah.
What do you think about those two different models? One, which is the buyback playbook, which is, let's assume we just gave away a bunch of tokens essentially for free via some airdrop. Maybe maybe you had to do some work for them, but poof, they're in your possession. And now the company uses revenue to just market buy them all the live long day. Why is that a better model to align either incentives between governors and the company or to subsidize users? Why is that a better model than just straight up dividends? Just come to the faucet and you'll pull your $17 an hour as a dividend from this.
Obviously, it's a endless controversy, and it's been talked about in traditional finance since the dawn of finance. But this is this is my core philosophy with regard to capital management. You want me to invest in your company? How much are you paying weekly? 0%. But we're doing buybacks, and the growth of the stock price is going up because of the buybacks. No, fuck you, pay me.
Fuck you.
I
pay
was
me.
hoping you would be of the opposite opinion, because this is my
I don't-
conviction also. Just pay me. And
yeah.
I've yet to find somebody to convince me otherwise.
See,
I like
see,
dividends.
so what we align, but here's the reason why folks like buybacks is because number go up, and the vast
Well, today,
majority. Well, we're okay. So we're a very minority mindset, and maybe a minority and also capital. The majority. I mean, if you really want to talk about the majority can't pay a $400 emergency bill in the United States. So it's a complicated conversation. But the majority want to take $400 and put in a stock and see it go to $1,000. They don't want to put $400 into a stock and get $5 a year in dividends. They want to see the number go up. So the buyback model is much more palatable for what has become the vast majority of investors. So they see the
so
numbers.
It's doing well in crypto now because there's actually profitable businesses. And we've had this conversation. I know Messi and you and I have talked at length about this in the chat, where it's like, I know his opinion is more leaning towards like buybacks don't work now. And I think the issue with buybacks, because there's always a nice story. It was like, hey, like, 2017, there was all these companies, we're going to do all these things, we're going to have these users, and there was no connection to the token. And so the token would just be here and the company would be there. And then buybacks were kind of like BNB made them pretty popular when they had a very profitable business and their token did very well. But the vast majority, it was like, we're buying things back, but it didn't matter because there wasn't enough revenue. And now we're seeing things like Pump this month, obviously grabbing headlines last weekend as they're, putting 100% of their revenue into buybacks, and they have a lot of it. And so it's having a very material impact on price. I've always liked buybacks. I've always liked the idea. The concept is like build a profitable business, make money, and then use that money to essentially lift tokens off the market. I liked buyback and burn more than just buyback, because the question is kind of like, okay, you're buying it back to do what later? Like sell it and spend it into the highs, like the ripple play, where like they'll just lift tens of millions off the floor and then you'll just see them like offloading it like insanity at the highs. And so they're just trading their own thing. Bringing this to Nirvana, we actually have kind of a bit of both, right? We have our tokenized revenue, and that tokenized revenue from things like Samsara that's coming up goes back into buying Ana. But we don't burn it because we need some kind of capital to fund things. And so we could do a small amount of buybacks and then use the rest to fund it. But because you can borrow against it, interest-free, liquidation-free, take 100% of it and buy it back and use that USDC that we borrow out of it. And that becomes our funding. And with regards to dividends, it actually kind of also pays a dividend, because as the floor value of Nirvana ticks up, everybody holding it, everybody staked, increases their borrow capacity, which I know a lot of people, like the person who introduced this to me, shout out to Shillpill, and he just says like, hey, every time floor ticks up, I'm just taking more cash out. And when it passes my cost basis, it's tax-free, it's a debt. And so we've actually got this like beautiful little synergy here where we could do both. Like you can actually have both. Everyone gets a little dividend when the floor ticks higher, and 100% revenue to buybacks.
Ted, no one's ever done anything like this. You've changed the equation. This is I don't even know how to describe it, because it fulfills what I need with regard to my investment thesis. And I'm a dividend investor. I care less about buybacks, but buybacks obviously are beneficial to either a protocol stability, some envision tokenomics, or catering to a cohort of investors that want to see number go up. And so, as you said, it's doing both. You got this buyback component, but you also have this weekly cash flow component. So in brief, the only reason I align with the weekly cash flow, first off, the best you get in TradFi is Realty Income Corporation on the monthly. Otherwise, you get it quarterly. And in crypto, you get weekly, because that's, from an accounting standpoint, it changes the equation. Everyone operates on a weekly basis. You bank on weekly cash flow like a salary. So, but that's my take from an investor standpoint. From a protocol, from a business standpoint, this is uncharted territory in one of the most extraordinary ways I think I've ever seen thus far.
Something I struggle with is why it is so uncharted, because to me it just seems like the most straightforward, simple way to connect 2 points. That, to your earlier point, it's a smart contract. There's barely any CapEx or OpEx. The application is an exchange. Every time there's a trade, you have a fee. So there's just cash flow coming through this. Why complicate things with this cash flow? Just pay it out to the users, just as a direct dividend. You made $10 in the last hour, spread it out to people. I see these ridiculous Rube Goldberg machines where I'm like, okay, we're going to liquidate, we're going to buy our own token that we airdropped, and also we're emitting it out to other people. Just go directly to Go. If you have money that you want to put in the pockets of the people who are invested or using your project, just give them the money without this mediator.
That works with, someone with 10 mil net worth and $1 million investments, and they're like, what the hell am I going to do with $2 million this year? can I get 200 grand from an investment? That's cool. That'll allow me to pay for kids' college and do X, Y, and Z. That is not an equation that 99% of investors will probably even ever have the capacity to entertain. And that's the complexity with cash flow. $50 investment producing $5 a year in cash flow is like not even non-starter. But when they see that $50 investment becomes $65, they're like, something's working. Maybe it'll go to $100, and that's where we are.
Well, that is why Nirvana and Samsara unify the speculation with the dividend. So you're holding the ANA token, and yeah, it could go up 100x, knock on wood. Meanwhile, you're also getting the dividend. It just seems like the cleanest way to do work with your revenue.
Well, you're muting volatility, and you're fixing directionality because it's a synthetic, and that's just wild and makes perfect sense to me. And the credit component. So it's just the most lovely mix of what I look for from an investor standpoint and what the protocol needs to do from an economic and monetary flow standpoint. I mean, clearly no one else does it. I mean, the closest thing to like the circular flow of capital is probably the drones, but there's an inflationary component there.
Could you say more about that?
So
Aerodrome, yeah.
they have a bifurcation of capital flow. So the investors receive 100% of the revenues, and the liquidity providers are incentivized by inflation dilution. But I mean, it works in many regards. It doesn't work unto itself. This is the VE33 concept, and I define really VE33 as a failed idea. It only works when you have constant capital flows, a constant bid, which makes sense. You have constant dilution needed, a constant bid on that dilution to balance the economics, and that works because of Coinbase. It only works because of Coinbase and Relay.
How do you mean?
The amount of users that are introduced to Aerodrome because of Coinbase is effectively balancing the inflationary component and drying up that excess supply to such a degree that the price action of a relatively highly inflationary asset is not straight down and to the right. So
it started there. Yeah. I remember when it came out and it dropped whatever it was, 5 cents. I find these kinds of things can be super reflexive, which is nice. If you're cash flowing, who cares? And if you're trading it, it's great. It's this idea that, hey, number go up, so I'm not going to sell all these emissions. I'm just going to hold them because they're all getting more expensive. And then once a few big players decide, like, I'm going to cash in on these emissions, then everyone who's been stockpiling their emissions, nukes out. And I don't know if you want to pull up that chart. I saw you hovering there. But yeah, Aerodrome has been that fairly reflexive and
the cyclicality.
There's Velo. So
they get the same thing in Aero.
Yeah, and then Aero, exactly that. Yeah, cyclicality. So it's actually one of my swing positions from the summer is Aerodrome. And I think probably because of you. We were chatting about it, and I was like, yeah, you know what? It's just Coinbase. It's on base chain. It's the stalwart over there. Like it's gonna be part of the party. I'm just gonna hop in, but I'm not V33ing it. I don't have any historical success with locking things other than Bunny, which, as you know, and they're not success, but I'm locked. So I decided to pass on that.
Now, of course, I would love for ANA to go up to $1,000 a token and the floor at $500 a token, and everyone's in permanent profit who bought beneath that. But short of that goal, the silver metal would to have the maybe the only non-cyclical digital asset out there, at least to be one which is actually counter-cyclical.
That is it's a reserve asset
Mhm.
that, and it's, is it going to be, what do you envision with regard to permissionlessness, with regard to markets? Is that possible conceptually, or would that be detrimental to?
As far as like Samsara listings,
Yes.
yeah, I believe.
Permissionlessness is almost doesn't apply in this case, in that there should be one samsara market, one derivative, excuse me, for all digital assets out there. And eventually you'll get to a point where it's just automated when there's a new token created that has at least some market liquidity. Create a samsara market for it, but you only need one. There's no reason to have more than one. So is that permissionless in the sense that as soon as a hot new asset hits, a samsara market automatically emerges? Well, it's kind of a second order permissionlessness because somebody created the digital asset. Now there's a samsara market, the creation of it. Nobody asked for permission there. Do we need
Yes.
to allow, just anybody to create a samsara market? Well, no, because then you'll have clones of these things.
That's a good point. Yeah, someone could just come and spin up a new AV Soul just because they missed the first one or whatever.
So
Yeah, or
the
dollar or market.
problem that permissionlessness solves in crypto is just no gatekeeping. And that just is not needed with Samsara. There's no gatekeeping going on.
It's a one for one, so it's a reflection of
Yeah.
of the markets that are created. You have a reflection in samsara, so that actually, that is permission, or at least conceptually what I was thinking about. um it achieves what I was thinking about. That's extraordinary.
If the listing process became automated, which is not a day one feature, but I imagine you're talking about it, Sid. So I imagine it's something that you've thought through and can do. Then that makes a lot of sense. Kind of similar to like bonding curve graduations on launch pads, where if token X hits certain thresholds, the market spins up.
Yeah, a unique property of this exchange is that there's no cost to list. You don't have to go through these arduous deals where you're setting up market making liquidity. You don't need to lend a little bit to get these things moving and grooving. You just push a button and it's live, and the liquidity of a samsara market bootstraps itself just based on demand. So given that there's no cost to turn one of these on, the the ideal that it approaches is that if there are 70,000 useful tokens being traded on Ethereum, there are 70,000 samsara markets on Ethereum. Why not? The only cost to the company is just having a database off chain that can handle all the transactions. It's nothing.
It's the wildest notion. I love
Yeah.
that.
Back to your original point, the things that you can do with smart contracts. We were making
Well,
a comment in the green room before going live that one of the frustrating things about crypto is it hasn't been crypto enough. You have this beautiful system of just self-running machines, and all you have to do is write the code, and they are on, and they're on 24/7. Why aren't we embracing that principle more? You can have negligible capex for an application that's processing trillions daily in volume.
it's weird considerations. You'll have the hard money folks always remind us that every single currency unit in crypto is ultimately a derivative, and none of it is actual money. And to some regard, I agree with that. But I don't think this party ends for a long time. And party has a negative connotation because these synthetic monetary units are meaningful because they incentivize activity. They could you could have compensation, and they provide fintech functionality. So these are businesses. So why are they more popular? They're probably going down psychological conversation. You still have the fear component. You still have a comprehension component. Um, the vast majority of the general public operates still on paper currency. And this is so above and beyond the operating system of the majority. You got to remember. So this this that's why these are the greatest opportunities that I've ever seen from an investment standpoint. And there's not many. It's a select few, and it's my portfolio. Because the vast majority won't understand this. Um, it it'll be the minority, and the minority historically is who outperform. Uh, you don't have to change the world at the majority. You change the world slowly at the margins, one cohort of people at a time.
It always works like that, doesn't it? And you have the
Yeah.
early adopters, you have the lunatics who are meeting in, a bar to swap ideas, and eventually you cross the chasm, and then it's all at once with the majority taken over. It does feel like we're still very much in the emerging early adopters terrain with this, as we're still figuring out, we're still pushing the horizon of what can be done with such a frictionless ledger that's been created.
That's really what brought me here. Was that it was the first time in a long time I saw something new being done. Right, every chain that pops up, and there's some good new chains out there. I think it's going to be really tough to break into the current paradigm, but it always is. I still remember when Solana came out and it went down only for a couple months, and everyone was like, "Fuck Solana, it's so bad," And then the wallets in the first year weren't very smooth, and the chain went down a little last year. Or was it 2 years ago? Like it took its time to break in, and now it's this place where people are kind of like, I can't imagine a future where it's not the thing. It's even still not even number one after Ethereum, but so all that to say, I think there's still a lot of room for chain growth, but when a new chain comes out, what happens, right? They get a Uniswap clone. A lot of them now, they're getting a V33. You're getting an Aave type clone, and you just have your kind of plumbing, but not a ton of innovation that I'm seeing in DeFi. There's some really cool apps out there. There's some really cool products. I've been actually speaking with a lot of them over the last few weeks that I'm really interested in. But from like a market structure point of view, and I think this caught your eye too, Noah, is why we're here chatting about it. But it's like just this idea of like essentially a smart bonding curve, the AVM, that just reallocates liquidity into a zone that we call the floor region. And when you do that and you have math and code that's backing that and making it such that it's impenetrable, you can do a lot. You can do a lot with the funds that are in that zone, namely, looping and borrowing and not paying interest and essentially having no liquidation risk. I mean, it's just the first time I've seen that in a long time. And then, speaking with you, Sid, early in the year, and your intentions to kind of decentralize this and push it out there and have it sort of, the revenue, going out. And it's like, oh, it's the perfect match, something new, something interesting, something novel, something that will generate revenue, and something that revenue won't be hoarded by the company. Like, I'm in. So
this dashboard is astounding. This has got to be one of the sexiest things I've seen. Honestly, it's the first time I'm seeing it. It is. I don't even have words right now. That's crazy.
So yeah, this just came out this week, I believe. You guys, the dev team pushed it live this week. Just want to, you want to have things you can see all in one place.
Oh my God.
If you want to click through to, any of the markets, I'd actually have to connect my wallet. I should do a connection though, because I wanted the other page that I think is interesting that I wanted to show you is the portfolio page. Let me just sign in. That's how you know I'm dialed in today. I'm not even signed into my Phantom wallet. I usually do that each morning, but
yeah,
work.
The genesis idea of Nirvana came from wanting to create something that solves the most fundamental problem in crypto, which is just value storage. The thing that attracts people to crypto is the numbers going up. Oh no, the numbers going down. It's the number. People get into this primarily because they're looking for something that has value. That's not necessarily the reason they stay. They discover DeFi and financial services, and there's a lot else going on in crypto. But the primary lure is the idea that you have a digital bearer of value. I caught this mind virus and then went to conferences to meet with people and figure out how to bring this to market. And the conversations always bent towards, I need to introduce you to my friend at Wintermute or this market maker. Or there's an agency that'll set you up with Binance. And I was thinking to myself, what the heck are we doing here? This sounds like a mess. I thought this was crypto where you can just create a smart contract. That was what hooked me. The idea that anybody with a laptop can invent something, throw it in the marketplace of ideas, and off it goes. And it turned out that the way this is done is through backroom deals with well-moneyed, high-level individuals. And I returned back from this tour of conferences, disillusioned in the best sense of the word, and thought, can there be a way to do this alongside the principles of crypto that I was led to believe it exhibits? Which is just, you release the code, the algorithm, the program, and it runs and bootstraps itself just from demand. That was what birthed Nirvana. A smart contract standing on its own two legs and feeding itself. Samsara has kind of a similar angle where you see all of these digital asset treasury companies springing up whose mission is to accumulate digital assets and hold them in their hands like diamonds. And it's the same theme a second time over, where I'm looking at how much they complicate this with diluting their preferred stock and having committee meetings and figuring out what the right NAV level ought to be, et cetera, et cetera. And it's the thought is, my goodness, you can just have an algorithm which accumulates a digital asset. You don't need all of this legacy machinery to accomplish exactly the same goal.
You know who does? This was done many years ago. At least this reminds me of that. 1inch had this failed governance implementation where users could select these individual parameters. This is brilliant. And I always thought that was so incredibly brilliant. It was just the wrong time, the wrong place. Everything was wrong about the way 1inch did it. This is the most incredible thing. Oh my God.
Right. You just take all the gears. You take all the gears that, any metrics that need to be tweaked that would affect outcomes across the asset's life cycle. And you have incremental increases or decreases each week. And then you drive revenue to the governors. You just say, if it gets interesting. I think the thing I'm most excited about as somebody who's been staking Ana and earning Prana and not selling or realizing any of it. And right now, Prana has two primary use cases. You can stake it, and through that, you can govern on Nirvana and do this. Or you can earn a piece of revenue, which goes to Prana. But when Samsara goes live, Prana will then be able to be deposited independently to any one of these markets. So you could deposit it into AV Sol, or you could deposit it into the AV Ray market, which is actually, we're looking at the AV Sol one right now. So the point being, where all of the Prana now is sitting in one staking contract, or I think there's a certain amount not staked, but soon you'll have many asset markets to stake it into, and they'll have their own weekly epochs, and each one of them will have their own revenue per market. And so there's actually this new game that kind of emerges here that we talked about months ago that you might find interesting. It's a little bit akin to like the bribe market on some of these things, where you're like, hey, I'm going to put this here and earn a piece of the bribes or fees from that market. Whereas in this case, Prana is a token. You get it for free by staking Ana. I guess you don't want to call it completely free, but essentially it's this thing that appears magically in your wallet if you're staking Ana. And then you can take it to any of these markets and just earn a piece of the fees that run through that market based on how much percentage of the Prana you've put into that market. So if there's a new hot token launch and it's printing a ton of fees, everyone may funnel their Prana over to that market. And for that week, they're getting that. But if everyone moves it in there, it dilutes each other. And so maybe somebody, left back down here, the one guy who stuck around gets 100%. And so there's this new game that lives on top of Samsara, where you're just moving your Prana in and out of any given market on any given day, where you don't actually have any exposure to the underlying price risk of that market. And calling it the Prana Arena, and I'd love to see like a third-party app or an in-house app spring up at some point where it's just all about optimizing for like how you move your prana around at any given time. And then of course, a lot of people will actually do that for the sake of governing and, pushing buy fees up or floor raise cooldowns down or whatever the case is. But to your point, it just lives. It just lives there and kind of wash our hands of it. No proposals, no spotlight, no 2 weeks of arguing, just get some prana and push the fees around.
The irony is, I've often said the greatest tech isn't always the greatest investment. And that's just a reality that's very widespread across these crypto markets, because it's not easy to get great tech to be consumed or entertained, like to have the investment community be like, I want to engage with it. Everything here is so incredibly engageable because the market is a mirror. And they will see as people engage with it, it creates itself. It's a bootstrapping effect.
Yeah.
So, and that draws in more participants, and then
well, yeah, and it adds a layer of volatility, but in a kind of muted way where like one that I like to talk about lately is Carrot, because I've been speaking to that team lately and I find their product really fascinating. And it's essentially a dollar coin yield aggregator. So you mint Carrot token with your dollars and they take it to a few different protocols on Solana, all the major venues, and they grab the best yields and then they aggregate it back into Carrot token. And Carrot token just has this chart that's up and to the right, and it just ticks whatever that percentage yield is higher per year. And I think that's a fantastic product for simplifying dollar yield, but it leaves the degeneracy out of the market, which that's fair. That's not what their product's about. But if you were to stick a Carrot token under an AV token, you would not only have that collateral base that the floor value is 1 Carrot, okay, that floor value is ticking up in dollar terms with the Carrot token. So it captures that up and only to the right as well at its base. But it could go to the floor value now 2 Carrot. Like the AV Carrot token will be volatile in Carrot terms. And so I think that there's a potential there to capture volatility and excitement and degeneracy while still really unaffecting the actual Carrot token itself, but serving that need and that user base. And then, talking about the credit facility, if you want to capture the gains you have in Carrot rather than going and redeeming them back at the website and capturing, triggering capital gain, in most jurisdictions, you could simply borrow Carrot and then, nuke that out. And, taxable event, sure, but not against your initial cost basis. So yeah, there's some really fantastic things here. I think when you bring an LP token in or anything with an inherent yield, it's the most interesting collateral set, because it's like, why wouldn't you want to put a floor on something like that? But then also adds volatility. Like JLP is volatile. It's not insanely volatile. It tracks Bitcoin with a little bit on top, but these AV tokens, I have a feeling, will be quite volatile. But at the same time, kind of muted in the sense that the floor is not that volatile. It just kind of like ticks. I mean, we were looking at them earlier, but they just
downside.
Yeah, that's it. It just ticks higher. It's like, oh, look, we're in a bull market. Okay, we're just going to tick higher. Like, so it's the anti-volatility at the floor, and then all the volatility you want at the market price. They just kind of track each other. So that's fun.
And to your point, Noah, that it bootstraps itself. That liquidity in this case is abundant. It's not scarce. The liquidity just comes from demand, and it's not a zero-sum game. Listing a new asset always, until now, requires you to put up some capital to make sure that the markets are juiced and liquid and oiled. In this case, it's truly digital in the sense that scarcity is not a property of digital artifacts. You can make copies of digital things for free. And this rhymes with that pattern where you can have mirrors of samsara markets that are self-generating, self-bootstrapping. Their own liquidity, their own yield comes from organic market demand. You don't have to put up capital to get them going. So the scalability is quite enticing with how this can grow without any second thoughts.
It's actually the number one question I get when I'm talking specifically about like the Zen Loans vault going on top of this is, where's the liquidity come? Where's the lending liquidity come? And when I say self bootstrapping, they're like, what? I'm like, well, if you want to use the product and just say in some rare case, you were the only one, there's this AV token. There was never one buyer, and you come in and you've got 10,000 SOL and you want to, get this Zen Loans vault. You deposit it and you have your borrow liquidity. It was yours. You bootstrapped it yourself. It was always yours.
It unifies the makers and the takers. There's just one. The lending liquidity is the market liquidity, is the demand of the takers. And with that unification, a lot of interesting properties come out the other side.
You probably end up with this cyclicality, because that's exactly what I would expect over and over again in every market. So you have your aberration, your deviation from the floor, then you attack the floor, and then the aberration comes again. But and that's exactly what you want to see in this kind of market.
Yeah.
Then that's how people consume via debt, and as the self-appreciation will drive in more liquidity.
Yeah, it's cyclicality with a bias built into it, isn't it? Because if you ever do get a high water mark of euphoria, you ratchet up the lower end of the other side. In a way, this does start from an initial position that markets are cyclical, markets are sentiment-based. Don't kid yourselves. Things will go up, things will go down, just like DXY. But can you transfer the kinetic energy from the cyclical, sentiment-driven markets into a positive sum game for everybody?
Obviously, the opportunity is to buy near or at the floor price. Great time of greatest opportunity and time of greatest speculation. Well, we know what happens. We get these deviations in the market and the exuberance, and people don't even look at price, and that's when people that bought at or near floor are able to capitalize, and they're able to capitalize in the ultimate tax-friendly way.
Yeah,
it works like a hybrid automobile, where you do have the turning flywheel from the explosions of petrochemicals, but a hybrid car will transfer some of that energy to charge the battery. And as people are trading up and trading down, you're collecting fees, you're generating revenue, and that goes into charging the deep cell batteries of the floor all the live long day. Let the people trade, let them speculate, let them gamble, but invest that into something positive sum for everybody. Sock it away in a reserve.
And dig the model.
Yeah.
I really like the idea that with volatile assets as the underlying collateral, you'll actually see what is otherwise, like in Nirvana's case, a fairly irrational behavior, which would be selling into the floor. At floor, you can borrow 100% equity in your position. So it doesn't really make sense, but it hasn't been done yet. Somebody may someday, but with these things, as you pointed out, Noah, like people will sell into these floors, and there's actually nothing more bullish for the holder base of an AV token or on a token for someone to do that, because they're removing the absolute minimum amount of liquidity from the underlying collateral, but while also burning the quote unquote mouths to feed, essentially lightening the floor and making the whole thing more jumpy. So, but if Bitcoin's sitting at 500K and AV Bitcoin is sitting at the floor, and you think Bitcoin's going to drop to 100K, sure, like sell it, and with the intention maybe to buy it back later, or borrow it out and sell that. So the potential for activity on this thing, the volatility that's introduced with these assets is just it's fascinating to think about. It anyone's guess how these things will evolve and roll out, but to Thomas's point, if there is cyclicality, which there will almost always be in crypto markets, as each thing comes and goes and it gets exciting and dies, and we roll through. I mean, every blue chip in existence, Bitcoin most of all, has famously dropped 80% every couple years, sometimes multiple times a year. So yeah, I think when you have something that's kind of by design, just living through those cycles and not taking the full hit of the drawdown. To your point, Tom, it's like the goal here is to make this a bull market asset. Why not? Hell yeah. There's nothing about it, functionally that prevents that. But the plan B, that's something that's inevitably going to come, is this is a big gross bear market at some point. They always come back. And in that environment, much like this year with March and April, this type of asset really stands out. Because just in relative outperformance, it's like, well, it dropped 40%, but everything else is down 93, and so you have the outperformance to the downside. And step one, focus on outperformance to the upside. Step two, let the math just do the thing.
Yeah. Nirvana's purpose is to be a multi-trillion-dollar reserve asset, something that scales at the level of sovereign wealth funds or a piece of every well-balanced retail portfolio. And the purpose of samsara is to accumulate value in anybody's preferred asset. If you are long Bitcoin, you're probably going to be long AV Bitcoin. If you're really into Sol, AV Sol is a very rational place to park your money and let it ride. It's an improvement and an expansion on the value that's already there for these digital assets.
Stabilize the portfolio.
Yeah.
That's it.
But this is a level up from where most folks engaging on Solana want to graduate to. And that's an offering that I think has significant product market fit.
Yeah. Yeah, the home of the volatility. We built it at the home of volatility. So it should be a welcomed treat. I think, we're really just ramping up the chatter about it really as of this week with regards to Samsara. There is such thing as speaking about it too soon. I think internally in the community, we've been talking about it for quite a while now, but publicly really just, aside from these live streams, maybe in the last week or so where the content's starting to come out, and I'm very excited to see what the appetite is like. And, it's something new. It's not something you can point to and say like, hey, it's the Aave of Solana. Like, it's just, there's not a direct comparable. And so I've got my work cut out for me from an educational point of view and just, helping the world make sense of it. But as with all things, sometimes you just got to be able to touch it. So we've got DevNet campaigns planned to invite people in to, really get a feel for it, and want to drive all that interest and understanding as well as, ahead of it as much as we can. And that all just kicks off right now, which is exciting.
Oh, Solana's killing it.
Yeah, it is.
$12.54 billion. It is the largest crypto network outside of Ethereum, aside from Tron, but that's a different equation. It is twice the size of Hyperliquid. Hyperliquid is like what everyone talks about right about now, and the number go up and buybacks and what have you. It is twice the size of Hyperliquid. And the folks really got to understand that the amount of currency units there, why are they there, and what are they going to do? This is the network to launch this on. And to top it all off, that recent headline with base integration, the base bridge that the base team wants to build, that just gets weird, because then you can take your deposit tokens and you could launch them on Aerodrome, and the communities
Tell me more about this. I know you're getting into it, but like specifically what's new? Because I was literally talking about this yesterday, and I was like, what? Like I already bridge to base all the time from Solana. So like, what is it? Just a more streamlined token wrapping? Can you talk about that a little bit? Because I was ChatGPTing yesterday and it didn't know. It's too new.
What I hear, I mean, they already have the repo, so there's the base bridge. So, but I'm inclined to think they're gonna do things a little bit different. Aerodrome's been talking about the bridge, and this is only the last couple of days. So clearly, I don't know, but I'm speculating. And how do you take bridging to another level? Seamless deposits, accept deposits, Solana deposits on base
like
contracts,
through the Coinbase wallet in particular. Is that the idea? Because you can already hold Solana assets in your Coinbase wallet. But my understanding is that something here is just making it all more seamless and more like you'll feel like you're on both chains at once. But I couldn't quite grab the tech of that or the insights.
Well, maybe they have, maybe Coinbase offers, you know, uh, Solidity level API, an implementation that facilitates a direct, Phantom wallet connection to Aerodrome, so the deposit automatically accepts the Solana asset and routes it through the bridge and triggers the cross chain, um, the intent cross chain, triggering the base side contracts to execute accordingly. So obviously a one-to-one tokenized representation. They're not native, but I don't know. It makes sense to me technologically how to do that, especially with these cross-chain intents, the way Stargate and Layer Zero implemented them. I mean, that exploded with CowSwap
Mhm.
doing cross-chain intents. Just really weird. And these OFTs are just, the potential is wild, especially
Yeah.
with just what Aerodrome, the potential is there for downstream bootstrapping with liquidity financing, as I define one of the five businesses. Because if you could, the way that bootstrapping is working on Aerodrome is the community talks about it and it is able to crowdsource governance votes. And those governance votes apply the Aerodrome incentives to a new LP to drive liquidity. And by driving liquidity, you're literally driving demand. Now, all of a sudden, there's a tremendous bid on an asset to fill the liquidity to gain access to the incentives.
Mhm.
So it drives all this economic activity. Potential is kind of weird, especially with a base token. If like they do the Arbitrum and Optimism grant style, and an Aerodrome has these multi-million-dollar base grants, that all this drives economic activity.
Yeah, what we're seeing is the beginning of what you could analogize to be a global free trade agreement between different blockchains. We're
I
just
love
tearing
that.
down some of these barriers and letting commerce flow more seamlessly.
But and you could build on any chain and do anything on any chain. So you're not constrained to just Solana, and everything is seamlessly integrated. I called this back in 2021 seamless cross-chain liquidity provisioning, and that's really this OFT that Layer Zero came out with.
Yeah,
Brian, we were in a chat with him some years ago.
Yeah. I was actually
and
with
then,
him at Breakpoint years ago. Yeah. We, right as they were seed round. Yeah.
and then he said he's in the chat. He's like, "Yeah, we just launched this protocol," and I'm like, "Dude, do you guys see what he just launched? Oh my god!"
Yeah. Yeah. I mean, I've looked at some Layer Zero integrated projects. I still personally, when I use it, it's like a bridge. I'm like, oh, I go here and I move this, and now it's over there. But I also know that there's like apps coming out that are Layer Zero enabled, and I've still never quite dug deep enough to understand the difference. Actually, a month ago I was clearing out an old wallet and I had to use like 6 different bridges, and it's like, oh, this one doesn't support Harmony. I think it's some old Harmony stuff on there, and like this one doesn't support Mantle, and there's a lot of bridges is what I found out. I think I used about 6 different ones that I'd never heard of. But I think from a flows perspective, Layer Zero is still right up there. Stargate probably near the top, if not at it.
Under the hood, there's not much technical magic going on. At the end of the day, you're just sending a transaction here, sending a transaction there, waiting. And we're in this period. I remember 5 years ago that you'd try to plug a monitor into your laptop and you create this daisy chain of, okay, I'll do micro HDMI to regular HDMI, and then that to USB-C B, and that to USB-C T. It's like that with these bridges. And now we're just smoothing out the wrinkles, getting rid of all these dongle daisy chains that you have to do to move a number from one distributed database to another. And it's an interesting economic question because you got to think that some of these blockchains have a almost perverse incentive to stay siloed. That if we level down everything and the differences between different blockchains don't matter so much anymore, the gas tokens that they each use become more fungible with each other. And you might have a Brexit out of the European Union because you think you're getting the bad end of this free trade agreement. Who knows? But it's definitely a win for the users, I think.
So seamless cross-chain breaks down the borders. That when you described the cross-chain intents, you said it better. It's just the sequencing of messages across these networks, the triggering of one message from one network on another network. Wild.
That's all it is. It's 1980s style computer science, but enshrined in the halo effect of companies that are venture backed. We sequence messages, and we have a really slick website.
Can you believe that that's game changing? In 2021, the fact that we just did what you just described is game changing, is fascinating. That's how, in many regards, crypto was antiquated financial technology back in 21.
Yeah, we're still banging rocks together trying to make fire.
Yeah, but where we're heading now with the deterministic, the capacity for deterministic cross-chain intents and these deterministic contracts on both chains and seamless swaps of liquidity and assets, it gets really weird because now you could automate all this. I mean, in theory, you could have like if like Aerodrome and Curve, this concept of liquidity financing is meaningful. It drives financial activity at the expense of their dilution. So integration with those protocols is a benefit to any protocol. So how do you integrate? That's always a governance question in some regards.
You got to keep that bid flowing.
Well, no, that's for their protocols to actually be. That's the thing. Those protocols do have that constant bid. Otherwise, it would have been down and to the right. But these are what they ended up with is these utilities, these tools that other protocols can consume. So, for instance, how can Nirvana accumulate Aerodrome such that it could vote to direct incentive to an LP, and those LPs can drive financial activity back on Samsara?
AV Arrow?
Yeah,
stuff like that.
But that wouldn't be us accumulating it. It would certainly drive a deep pool of, potentially a deep pool of Arrow under the market. But
fun fact, remember Abracadabra?
yes,
very well.
Still have some spell.
Do you know who has paid $150,000 a week for the last 3 years in vote rentals?
Still Spell. Yeah, that's why the token's having a hard time taking off. Well, that was the issue with Spell, was that it was using so much inflation for liquidity provisions on Curve.
But it's not down and to the right. They've stabilized. And when this market goes exuberant, everything that's not bolted down goes up and to the right. But I guess the point is, they're one of the few that have found that harmony of vote rentals and whatever Curve or Convex that they own to do their own rental, and that drives their liquidity or the incentive on the liquidity, and that drives the financial activity back in their protocol.
Yeah,
so it just becomes an asset.
I'm surprised that MIM has not made more headlines, to be honest. Like the fact that it survived everything it survived, like mass liquidation events, like depegs, but then it works. It's like, oh, I have all this debt. I'm going to buy 76-cent MIM and I'm going to pay it off until it's up back to $1. Like it's a very smart system. I've always just, I still have an old and, OTC bag from way back. It actually just started or stopped vesting in like May. It didn't finish till this year, but it's just quietly sitting there working, doing its thing.
Few things have worked in these crypto markets.
As I said, between cycles, like few things have survived.
5 businesses, and it's rinse and repeat over and over again. And where does Nirvana and Samsara come in? That's something new. It's as I said, it's a combination. It's the derivatives and the liability printing. That's a combination that we haven't seen before. I mean, obviously, it's still one of the 5. Still one of the 5, but that's a very reductionist mindset from my investor mindset. So it's very stereotypical. It's how I categorize. How do I understand this complex shit we call crypto? But it's a heck of a combination. Changes the equation.
Buy in for second best. There's paradigm, take over the market.
There's a SaaS layer to this too that I think I don't know if you and I talked at length about, but the AVM is really the core component of everything we do, right? It's what I'm calling nowadays, I find for ease of understanding, is the smart bonding curve. There you have a bonding curve, the liquidity sits inside of it, there's a price curve, and it just follows it. But what if that bonding curve could take action with the liquidity inside of it and reallocate it into a floor region? And so Nirvana is, test case, proof case number one, mothership. And then Samsara is like, how can we go back and apply this AVM to all the other assets that already exist? And then going forward, there's always been talk of a launch pad, right? This idea of like, what if we could launch a new asset with this thing baked into it? And we made the decision not to try to launch our own launch pad. It seems like there's just too many, and there's really only one or two that anyone cares about. And why try to compete? Why not build a SaaS layer integration where you could approach a launch pad that already has their products out there, and they're all launching pretty much the same thing. There's some variations in the exact mechanics of what it takes to graduate and then what it looks like just after. But at the end of the day, they're all the same. A little bit of locked liquidity, which in the end, if the project rugs, the idea was it couldn't be rugged, right? It's like, oh, there's some locked liquidity, but it's like 100K locked liquidity. So when it goes to 20 million and it goes back to 100K, you got rugged. Like, it doesn't feel too good. And so the next other arm, I guess, of this on the BD side and the growth side is like, let's find a launch pad who wants to really compete with Pump.Fund or Pump.Fund themselves. And let's get this tech baked right into it. And so, right inside of every market that launched on top of that, you would have that native lending, borrowing loop. All of the facets of these AVM markets would just live inside of any meme coin, governance coin, whatever was launched through it.
B2B
It really
product.
is a new kind
B2B,
of asset class, one that
Yeah.
is backed by a reserve that is essentially an infinite bid wall that just creeps up over time. And that is as applicable to low market cap assets, like a silly little meme coin that goes up and down not too far, or maybe some hot new blockchain is emerging and it's going to have a 50 billion market cap gas token to go with it. Launch it on an AVM. It's still your gas token. It's still speculative, but has the reserve back floor. Over are the days of 80% drawdowns. I hope that we build towards a future where we look back at those kind of charts where you take a 90% bath as something barbaric that we've grown beyond. Because you don't have to live in that regime. There actually is a way to protect your investors.
The dial-up bonding curves.
Yeah.
Yeah. So, if you know anyone who's griping about this, just let them know there's a better way. And, we're getting to a point where I think, when things are good, nobody really cares. It's not broken. Look, I'm up 50x. And then like one guy grabs his profit and the whole thing collapses. But, I think there's a certain point. We hit that point in January and February. This particular BDB product was not quite ready. It may be the case that, the storm comes through and then it's like, okay, now we're all ready to listen. What can we do? But in the meantime, just know that this B2B product does exist and it is ready to deploy and integrate with any launchpad that's interested. Talking to two right now, but in the meantime, I think there's only there's so many, but like when you go look at the rankings, there's like this one, and then all of these. Like it's very centralized right now with regards to like who's grabbing the volume. So I feel like every single person or every single product that's not Pump.Fund should be really interested in finding a leg up.
That's a launch pad. Well, I love the idea of B2B products. In fact, my investment thesis is predominantly B2B products. It's not business to consumer. Like I've shied away from Pump.Fund. To my detriment, that's a tremendous product and it's done very well. But I just see the biggest businesses in the world aren't business to consumer. It's business to business. You don't even hear about them. You're talking like traditional finance. I'm interested in the business that Great Britain is doing with China, not the customers in China, the actual countries. Those are the big businesses. So that's why I've liked this liquidity financing. So when you mention concept of a launch pad, that's a big deal. Why don't you
Well,
launch differently? Why don't you be different? And we have the
Yeah.
utilities and the infrastructure to be different, for things
that's
to
it
play out
exactly.
differently.
Mhm.
B2B SaaS.
Yeah, and
Let
and
the
then
market decide.
and don't wait for borrow liquidity to arrive on whatever your favorite borrow lend is. Like it's baked right into the token from day one. 15 minutes after launch, any kind of liquidity entering the system, and you're already free to borrow.
That is what usually clinches the pitch. That, oh, wait, there's more.
Yeah,
Your
there's more.
users get zero interest rate leverage with no liquidation risk out of the gate.
Mhm.
And then
See,
they pick their jaws up off the floor and, okay, can you send us an SDK?
it might be. So how do you even? Folks need to know accounting, and the reality is we're talking the general public of crypto. Probably the vast majority don't do accounting and don't do reporting.
Not
So
as
that's
much.
kind
Yeah.
of it's kind of a complicated thing. Like you could borrow and it's not income. It's oh my God, the equation is extraordinary. So that's targeting mid-tier, potentially high net worth individuals more so.
Mm-hmm.
Yeah. Well, yeah, the ones who have accountants that kind of understand the buy, borrow, and die strategies. Somebody told me the other day, they said, like, well, I don't know, man. Like, everyone just goes to Dubai. I'm like, yeah, because they have to.
You can't just go.
I
There's
think some of them would have liked to have,
expatriation.
yeah, like I think some of them would have liked to have just stayed home.
You can't
To,
just go though. If you leave the United States with $1 million and you got a social security number, they're gonna know that one, you had a plane ticket. Two, listen, that's the talk on social media is astounding where people's minds go.
Yeah. Well, yeah, and I know a couple people who have relocated to Dubai. I don't know this because I'm not from the States, but I hear they follow you everywhere, which
Oh, you're taxed globally.
kind of makes sense. You know what I mean? Like if you want to run a tax-based economy, like or a government system, like, but in general, I feel there's this sense of like probably don't come back. like even
Yeah.
in Canada is the same way, and I don't want to leave. I love where I live. I don't have any particular desire to leave. And if I can access capital against my assets without triggering a taxable event, I will. It'd be a nice tool.
Work smarter, not harder.
Yeah, I've never actually done that. I always just pay full bore. So like the idea of using some of this stuff, but the reason I haven't used it is because it's a trade. It's a trade you have to manage. When you take a large position against your assets in cash, you have to manage that margin. And every year, like April this year with Ethereum, the large MakerDAO positions start coming up. MakerDAO positions, they come up, and it's like, this whale's about to get liquidated for $120 million. That's a taxable event. It'd be a horrifying thing to have happen. And in the meantime, you get to pay 8% a year while you wait for it. So yeah, I've never attempted such a strategy, but
I before my day's over in social media or whatever, I'm gonna have to somehow have a conversation that breaches this barrier you have to the cash flow investment. And I think of it as maybe an achievement if I could actually do that.
yeah. All
Spend what
right.
you borrow or spend your cash flow. It's a different
Mhm.
equation. And then just worry about how do you optimize the accounting associated with income recognition, or in this instance, not income recognition. It's just a credit that's owed that's never paid.
Yeah. Debt. Like, how do you reconcile it? Like, I mean, my tax account is actually CFO for a number of large firms in Toronto as well. And he's one of the guys we've been consulting with in our design process. And, and yeah, like every year he's just like, okay, but like you have two sides of your balance sheets, you have your assets and your liabilities, and like, they have to zero out in the end or whatever if you're using this debt instrument. So that's the nice thing about this. He'll already be warmed up for me. Like, well, that one, like that's the one we gotta. So I think as far as that point goes, ease of use, ease of understanding first and foremost. This is it. This is how it works, and then ease of use. All you have to do is click here. Like those kind of friction points are front and center with regards to design choices right now.
The best part of the borrowing and spending of the credit, the accountants would be like, oh my God, look at this balance sheet. It's insolvent.
Yeah.
He owes 50 he owes $1 million and he's got 50 grand on the balance sheet.
Yeah.
But that's that happens in crypto. There's some weird things like all my locked assets that are 4 years locked, they're insolvent, and I have legal documents that are signed and notarized that say I am not legally allowed to allow these locks to unlock. So what is it on the balance sheet? What is the fair market value, the FMV? I treat them as zero. They're
I was gonna say, yeah, I would write that down. Yeah.
so
I
that
did.
creates.
I did. You think I put money on my balance sheet last year? It's gone. It's gone.
I
And if
got
it ever,
these.
if it ever comes back and it's worth something and I sell it and make that money, that's income. I just write it like
Oh,
that's my accountant's point. He's just like, look, you can write it off. You can't sell it. It's locked. But like, if you ever want to reinsert it into your life and there's a gain there, and you just report it as income full bore. I'm like, yeah, okay.
what does that even
So,
mean? I got a $0 asset on my balance sheet that's producing what, 100 grand a year, 200 actual money. How does that
yeah.
even gel with traditional financials? It gets really weird.
Can you call Bunny and have them print $100,000 a year for me? Because I haven't looked at
No,
what they're doing, but I don't think their volumes where I would
no.
like it to be. I'm still following, but what are they doing? Okay, no, let's talk about Bunny later. I do want to dig into Bunny with you. We're just past the top of the hour. The world has not imploded, so I guess Jay Powell didn't say anything too rash. Although I say that as I haven't looked at a chart. Let's see. Are we imploding? Oh,
116, nothing. Literally nothing.
yeah.
So your
Nothing doing.
bellwether, it's literally nothing.
Yeah. No, we're right where we were before. So to your point, mostly priced in, but let's leave with a few forward-looking thoughts. We got a couple housekeeping items. There's a lot of whens going on. We talked about this late this week at our meeting, Sid. We're on track, I believe, within the realm of a month with some of our release dates. Do you want to talk about any of that right now, or just touch on it as we head out?
That Samsara mainnet is fast approaching. New features with Nirvana having to do with investing in the floor, fast approaching. More concrete news to come.
Beautiful. And Captain Rational. What I looked at your name tag. Noah. Thinking's heading into the year. I know we talked at length today. You're kind of just positioned long in cash flow and assets like that. Based on what we saw today, we talked before the show. I was kind of like, whatever little Darth Maul shit we get, end of the month. I don't see you get too excited too often because you're looking at 6 month charts. But this week, last week, I remember in the chat, and you're just like, it's happening. Like it's happening right now. Move. Bond volatility.
Oh, did I go over that? You want to do it? You want to
Not,
end on some macro?
yeah, no, I'm just like more high level. What
My
does
two
it mean? Like
cents.
what mean when you saw Dixie breaking that key level and just dropping off the cliff? What does that mean to you?
I see we're on the threshold of a secular trend shift. We started the stream today with the DXY up, and there was a very obvious cyclicality that happened over the last since the 70s. So it's 50 plus years, going on 60 and change years. We are on the threshold of a downward leg in relative dollar valuations, and that changes the global equation. So the best way to say it is my sentiment is there's a different world. It is a different world when the dollar is getting stronger versus when the dollar is getting weaker. And the dollar gets stronger and the dollar gets weaker over long time periods, 10, 15, 20 years. And what do I mean by a different world? I mean literally it feels different. The vibe is different. Going to work is different. The value and purchasing power of money is different. And it's not what people think. Like you could have a depreciating dollar and everyone's like the prices of stuff is going up in stores, consumer price inflation. But no, that's too small. You could have a depreciating dollar and you still have the cyclicality in consumer price inflation because of supply and demand factors.
Mhm.
Prices could go down. So people get lost in the weeds trying to understand this. But generally speaking, we're on the verge of the dollar going down, in my view, over the next 10 to 15 years, lower highs, lower lows, cyclically along that secular trend. And what does it mean when the dollar is going down? That means foreign currency is getting more valuable, and there's much more foreign currency than dollars around the world, and other countries' central banks have a capacity to print their foreign currency, which means they're going to be buying a lot of stuff. Gold.
Assets. Yeah.
Assets. So I think we're on the verge of a decade of higher lows and higher highs in asset prices across the board. And we'll see probably some awkward distortions in concentrations of capital or investment. It's like U.S. real estate's probably not going to double or triple because it kind of just doubled in the last 5 years, which is crazy to say. Is the U.S. stock market going to double or triple? I mean, actually, maybe, but that's just going to be disgusting with regard to disparity, wealth, the gap between the wealthy and the poor.
Mhm.
Can crypto go 50x across the board? Yeah, because it's unmonetized. We're talking about $50 million market cap businesses. You literally have things like Concentrator and Aladdin DAO product that has $120 million worth of deposits and a market cap of $800,000.
What?
The price the price distortions, the mispricing,
Dislocation. Yeah.
it's insane. I mean, look, Aave at what, 4 bill market cap? Why not 40 bill? Why not
Mhm.
value it like Wells Fargo, 400 bill? It's bank. It's the 37th largest bank in the United States of America by deposits.
Hmm. Yeah.
Indeed.
I've been really enjoying the dislocation in the market, the inefficiencies, things where like, news would drop and it would like, you'd look at the chart, you're like, oh, I guess no one cared. And then like at the end of the day, like even when BlackRock announced the ETF last summer and, and it was sitting there and I remember the news, it was like 10:30 a.m. It was just a tweet, no big deal. Nobody cared. And then like 8 hours later, it was just like the largest asset treasury, like 8 hours later and it shot up like 20%. And you're like, bro, like there's not one serious desk in the United States who's pushing size on these news developments. And I think that's changed now. I think, you're getting a lot more efficient, but as you just pointed out, there is still a lot of really juicy dislocations in the market. And we're just going to see those kind of gaps starting to tighten and we'll look back and then be like, I remember back in the day when you could just sit there and sip coffee with your hand and not have an algorithm and catch moves before, 95% of participants. So let's enjoy it while it lasts. And as always, love to hear the macro takes and love that you're in love with the products we're building. We're building we're growing the army of people who are understanding it and appreciating it. And thanks for coming on and appreciate having you on first guest of our roadshow. So thank you.
It's a pleasure. I love where you're heading. It's the product that is needed because it's new. It's innovative and it's consistent with what the crypto space needs.
Yeah, couldn't agree more.
Appreciate you seeing that.
We'll be live later this year, so I'd love to have you back.
Absolutely.
To higher highs and higher lows.
Oh, that's weird. That's so weird. Rising floor. That's so weird. Glorious.
Years. Yeah.
Higher lows.
It does feel like we're sitting on a launch pad here, so we'll see. Okay, guys. Thank you all for coming to watch. Hope you appreciated the show today and learned something new. I always do when I hang out with these two. And we'll catch you all in a couple weeks. Take care.
Peace, guys.